Hey guys, thanks a lot for having me. I'm going to read off my notes, which is a big no-no when you're pitching, but for me it's okay, so don't mind that. Quickly about myself first. I'm Russian originally. I actually lived in Germany for about 10 years in Berlin, went to high school here, and then I went to the States and spent the last 15 years there, invested in New York and San Francisco, focusing on technology as well. I've never been an entrepreneur. In business school, I spent, I think, 4 weeks in a startup. Thought it was really hard and never went back. What I have done is I have talked to many startup companies, and I have developed over the last 10 years that I was investing a pretty good idea about what things might work and what might not. So it's kind of like being a book critic without ever having written a book, or maybe having tried to write a book and stopped it. So that's about me. About Excel, I think sort of the headline is we're very big and we're very old. And so we're founded about 30 years ago in California, and we have about $10 billion in management worldwide. We have made about 400 investments, and by the way, I'm going to be shamelessly pitching them out, so this is going to be just promotional. In consumer, it's things like Facebook, Spotify, Dropbox, Supercell, Wonga. In enterprise, it's things like Cloudera, ClickView, Atlassian, DocuSign, et cetera, et cetera. So I guess what I'm going to talk about briefly here for a few minutes is what we have learned for ourselves over those 30 years and some 400 investments, and how we have chosen to sort of shape our organization and how we want to come across as investors. One thing that we learned relatively early is that innovation is not limited to Silicon Valley. So especially with buzzwords like cloud, mobile, and SaaS, it matters less and less where your company is located, and more the quality of your idea and your go-to-market strategy. So what we have done is we've expanded from Palo Alto, where we were started originally, worldwide to 6 offices. We are today in the US, we are in China, we are in India, and we are in Europe. In London, we've been for about 15 years now, and that's where I am, and that's where I invest into Europe. We've also realized that we are investors, and we're not entrepreneurs. Many of us have entrepreneurial backgrounds and have spent time in companies, but ultimately I think the biggest value add for us is a strategic soundboard, using our pattern recognition over the last 30 years, introducing people, trying to help them extend beyond their local markets and really go international, where we can really leverage our network, and we can tell you if you want to go to India or you want to go to the US, we can really help you. And help you because we have offices there. We've been there for decades in some cases. And then ultimately, when it comes to exit, we can help you think about that as well. We're not the best guys if you're having trouble with your AdWords strategy, or if you don't know how to scale your call center, but we do have a lot of portfolio companies that are very good at that, and we're happy to make those introductions. Good companies come in all flavors and sizes. For us, that means we were an early investor in Facebook when the company was just a small social network in the US for schools and didn't really have an idea how to monetize it. And that went very well for us. We were also a later stage investor in Kayak, which is a meta search flight comparison engine, when they were already dominant in the US and were expanding to the UK and then Europe. That went very well for us as well. So what we do as investors is we're fairly stage agnostic. We invest anywhere from 500,000 to 50 million in a company, anywhere from pre-product to later on. And what we really focus on is trying to understand the right entry point where we can add the most value, and also trying to be disciplined about the potential size of the outcome. We have a large fund, so for us, a lot of times it's not the fact that we don't like a company, but that we need it to achieve a certain potential for it to be worthwhile from a fund returns perspective. Again, different perspective between whether it's a good company or not, and whether it's a good fit for us or not. But we have to be disciplined about it just because we cannot make too many investments, and we want to make sure that we spend enough time with our portfolio companies. Chance favors the prepared mind. It's a quote by Louis Pasteur that you'll find on our website. The way we think about venture is that no matter how good you are, a lot of what determines the ultimate outcome is luck, and there's nothing we can do about that. The rest is something we can do about, and from our perspective, that means being prepared and developing thesis. So what we do is we do deep dives in particular areas of the industry relatively frequently to develop a view on the latest trends and what happens in the industry, and develop a thesis of what's going to happen in the future. What we then do is we try to meet with companies in the area and try to see if anyone shares our vision, and then we try to pick a team that we think can execute on that vision. So for example, when we're invested in Supercell, we had the vision that mobile gaming was increasingly becoming mid-core, as you call it, so a little bit more engaged, and it was shifting towards tablets. So we were looking for a company that shared the vision. Supercell in Sweden did that, and they make games like Clash of Clans and have been successful with that. And last but not least, decide quickly and then be patient. So the deep dives that we do help us react quickly and figure out whether we like something or not without a lot of work, which I think is fairly entrepreneur-friendly. But then we're in it for a long haul. Our average hold time is, I think, 8 to 9 years. And I guess depending on how you count it, we've been through at least 3 business cycles, ups and downs, since the 80s. And we know things can turn good or bad very quickly, and are ready to partner with our entrepreneurs for a long time. That's all I have, guys. No questions, right? All right.
Thanks, Michael.